Alright, I was asked to do an update on a stock that I've noticed has been squeezing. I haven't actually looked at the chart yet. It's pretty funny looking at the monthly chart though. It was just grinding down here and then all of a sudden $2 all the way up here to $39. So in this situation, if you're buying on this move right here, I mean it could work out for you, or it could turn you into a bag holder. So if you don't catch it down here, then I probably wouldn't recommend buying up here with how far it's gone in such a short period of time, because a lot of times when these moves happen, just observation from looking at all kinds of stocks, when these moves happen right here, you get something like this. And it could honestly take like years. I don't know anything about the stock. I don't know about the fundamentals and like that. But when these moves happen, what happens is everybody gets excited about it. And then they slowly take it down. Everyone's like, oh, it'll come back. And then it goes up. And then it goes down. Everyone's like starting to panic a little bit. If you look at the psychology chart of a stock. And then eventually it just keeps on going down. And then before you know it, you're bag holding, thinking, how is this going to go down? Blah, blah, blah. It's not a good situation to be in, obviously. So if you're not already in the stock, I probably wouldn't get into it now, even at 29 bucks. I'm waiting if I'm getting into stock for a pullback. Regardless, if the pullback doesn't happen, then okay, I'm moving on to another stock. I don't really want to risk my money at when this has gone up 19 times or whatever, however much it's gone up, thousands of percent in the last like 4 or 5 months. So if I'm looking at this though on the monthly chart, it's way, way outside of standard deviation most likely. The first two spots I'm looking at, this is 3-day demand right here, and then this is weekly demand right here. I put them on there already. So those will be two spots I'd be looking for a pullback to potentially start averaging in. If you're afraid about FOMO and you're afraid it's going to keep on going up, one thing you can do that's pretty smart is take whatever amount of money you want to put into it, and then take about 5% of that amount of money and just buy. Doesn't matter. Buy it at 40 bucks, whatever. So if you have $40,000 you want to put into it, buy $2,000 worth right up here. If you're sure that's going to keep on going up, and then when it goes to 50 bucks, you can sell and you feel like you didn't miss out. But buying a bunch right here is just stupid. So then when it pulls back, you can average in with the rest of the $38,000. So with that being said, this move's happened. You can see it's very overextended. You finally got a red candle here. Looks to me like it's probably finished. Even on the weekly, it's way, way outside 2 standard deviations. So watch out for sure. First place I'm looking at is down here at 22 bucks to 19 bucks. And then after that, I'm looking at 13.90 to 11.96. But I'm also looking at fibs. So I would not be buying, if this is the pullback, I would not be buying until minimum 20 bucks. 0.5 fib, which is actually in the 3-day demand. But it could go all the way down here to 10 bucks, and I would not be surprised. So anywhere in this area, I'd be buying. So first place I'd be buying potentially is at 20 bucks. And then I'd probably be looking at weekly demand between 11.85 and 14.01. And that's pretty much it. I'm not going to go over the waves on this. It'll be pretty obvious once the second wave or B wave or whatever is started. But you don't want to be buying until at least the 0.5 retracement, and then all the way down to the 0.78 retracement. Once you buy down here at the 0.78 retracement, you're risking then about 8 bucks to make 50 bucks. So you are getting a really good, a 6-to-1 risk reward on your money. But if you're buying here, and let's just say if you're using the bottom as a stop loss, which you wouldn't be doing, you'd probably just be bag holding at that point. You're risking almost like 30, 40 bucks to make potentially 20 bucks. Horrible risk reward. So with that being said, if I were in this stock, unless you're like scalping in and out, if you're trying to invest in the stock, wait until 3-day and weekly to get into it, because these are the kind of moves that create bag holders. And you don't want to be one of those people. You want to be the people that are getting in on the dip, being the smart money, and waiting for the next move higher. When I first started investing and trading, I would always get FOMO because I didn't know where I was at in the chart. And I had so many stocks where I did this. The stock was going up, and I got tricked into getting into it. And then it came down, and then it just sat there. And my money was gone. And I had to sit there for a year or two just looking at my account every day, down 60%. Because I didn't know what I was doing, and I was just trading based on emotions. And now I trade on logic, and I'm a lot more successful. So I would be looking for at least a 0.5 fib, 0.6 retracement. If you're getting in right now, regardless, you're probably going to want to do a very small position. That's pretty much all there is to say about this chart right now. Elliott wave doesn't really factor into it right now because there's nothing to really go by. It's a straight line up. So for the person that asks, that's all I got to say. I'd probably wait for a pullback. And once a pullback happens, then I can start like forecasting like what's going to happen a lot easier. So that's pretty much it for this video. AST Space Mobile. Don't know anything about the company. Maybe I'll be completely wrong and it'll go to 100, straight to 100. Who knows? But right now, that's my assessment. You do not want to be a bag holder. That's it. Leave me a comment, like, subscribe, and I'll catch you in the next video.